Hi, this is Elliott Eisenberg, consulting economist to American Pacific Mortgage, catching you up to date on the latest in the economy and housing. And the single most important thing I want to talk about is interest rates. They drive the housing market more than anything else. It's the most interest-sensitive sector of the economy. When the Fed raises rates, they know they're hurting housing. But the Fed is going to start, sooner than later, lower rates. And that's going to help the housing market. And the expectation of this and the reduction in inflation rate that we've already seen falling from 9 to 5% has already resulted in interest rates falling. And inflation will fall further, and interest rates will fall further, and sometime in the future, the Fed will lower rates. So pay attention closely to rates. If you're looking to buy a house and you see rates fall by a quarter point, they may say 25 basis points in the lingo of lending and mortgages. Call your loan officer and say, hey, I think this is a great time to lock. Or conversely, talk to your loan officer and say, hey, if you see rates coming down, call me up. I'm not going to have time to look at the paper every day, but let me know and we'll lock and we'll buy the house and we'll be off and running. People are much more sensitive to this. Loan officers are much more sensitive. Sellers are much more sensitive. Take advantage of dips and drops in the interest rate to lock in your rate and look for a home. It's very important to try and look now. Inventory is not great. I have no illusions about that. But imagine when rates fall, and they fall by a lot, maybe in a year or two or three, who knows what. There'll be no inventory at all. Prices will skyrocket. There'll be all kinds of escalation clauses and so on. You'll have to make decisions in 2 or 3 minutes. What you can do now is find a house that you like with the limited inventory, but it'll be worse later. And then in a year or so, or a year and a half, when rates are lower, you can refinance. You can get the benefit of an inventory that's decent now and rates that will be lower in a year. And in the meantime, you can still catch a low rate, and make sure to talk to your loan officer.